Welcome back to Tezos X-plained. We are joined here today by Ben Elwich, and we are going to be talking about some new exciting developments around uranium IO. Specifically, we're going to be talking about the launch of Metals IO. So Ben, tell me, uranium IO was kind of the proof of concept. It worked. It got awards. It attracted new people to DeFi. It made a bang in media, in socials. So tell me more about how we came from uranium IO to now Metals IO.
It's a great question. I think we always started with the idea that uranium was a blueprint for what could be done. And I think what we were able to prove out with uranium was that you can take a market that's pretty archaic but crucial and use on-chain infrastructure and blockchain rails to improve access to that market. And so we removed a lot of the operational barriers, removed a lot of the capital barriers. And so in the back of our minds, when we launched uranium.io in December 2024, we thought that that would be the start of something bigger. And here we are. So we are looking forward to not just supporting other metals that we launch using the same blueprint, but actually it being a single source where people can come to metals.io and invest not just in projects that we've launched, but also other metals tokenization projects as well.
Interesting. So you are actively launching now with gold and rare earth metals. Is this purposeful? Is this connected to some global trends?
Yeah, so I think we always talked about uranium, so uranium will be available on metals.io as well. We always talked about uranium being interesting, not just from the fundamentals of how the market operates and how the asset's traded, but also because it's a technology flavored commodity, right? Uranium's linked to nuclear. Nuclear is now linked to AI. We think for a lot of the people that we're trying to attract to the asset, that makes it much more interesting than, say, a T-bill or a tokenized money market fund, which, tokenized money market funds and treasuries are the biggest growing sector after gold in terms of real world assets. So we looked at it from that perspective, and that's why rare earth metals is particularly interesting, because it plays into similar themes around previously inaccessible, but also critically important, not just from an investment thesis perspective, but also for society as a whole. And it's also well diversified from equities, other digital assets, and other fixed income type products as well. I think most people, when they think metals from an investment perspective, will think about gold and silver. We're working on silver, but gold, we've managed to get a project lined up, so we'll be launching with that as well. So less about that industrial, wider macro theme perspective, but certainly something that we see a lot of appetite for, and the growth of other gold projects is testament to that. And so we want to ensure that we've got a breadth at launch, and then we are going to add some additional metals to that in the future as well.
What piqued my interest the most, and I'm guessing the audience as well, is the rare earth metals. Can you tell me more about this?
If I think back to my TradFi days, what you're always looking for is to build a portfolio of assets in your account or wallet, as we'd say, that are diversified, so you're protected from different market cycles. So when equities raise, you've got other assets that might not increase in value as much, and vice versa. And so that diversification is important for growing your assets over the long term. That's not something that in the Web3 space has been massively available. Lots of digital assets are very positively correlated with Bitcoin and Ethereum, and that spans the whole market. And so actually being able to provide on-chain assets that are diversified, we think provides something that's not available widely in the market and should be attractive to lots of DeFi investors and other types of investors that are looking for exposure on-chain, as well as traditional investors that like to play commodities, but maybe are limited to using derivative products or can only get the big names like gold, silver, platinum in their current investment accounts. Things like rare earth metals, as we were talking about before, is critically important. And we're seeing a lot of news, and the news cycle is very rare earth metals and rare earth minerals dominant. What we're actually launching with is an external project that will be a basket that's fixed allocation. Rare earth metals, so hafnium, indium, others that are sort of unpronounceable but critically important for industry. And investors will be able to come in, connect their wallet to metals.io and purchase that alongside uranium and gold, as we mentioned before.
I think there's more information, obviously, online about those unpronounceable metals, and investors can decide and see for themselves, right? So can you explain me a bit about Tezos technology and why is it important in the process of building Metals.io?
Yeah, I think it's all very much the same principles as when we thought about uranium.io, and it's robust, it's secure, it's fast in terms of execution times, and it's low cost, which means that people can focus on getting the best possible and closest possible exposure to the asset itself, rather than worrying about, has the price moved by the time I've completed my transaction? Actually, have the transaction fees chipped away so much that I actually don't get the sort of return profile that I want? You want to keep those externalities as low as possible and ensure that you've got a platform that can scale to be something that's huge, right? If I think about the market infrastructure around trading metals, the London Metals Exchange was founded in 1877. Metals trading hasn't really moved on in almost 150 years. So it's not like trading equities or fixed income. There isn't electrified markets and very transparent pricing. A lot of it is traded OTC or in exchange like the London Metals Exchange, which is open outcry. What we see with the possibility of metals.io is to modernize that market infrastructure that hasn't changed and bring it into the future with the best possible technology that we've got.
I know we have touched upon this a little bit, like who will be using this, but I am wondering as well. So are you mostly aiming for crypto natives, or do you think you will actually be reaching the more traditional commodity investors?
We think it appeals to everyone because things like rare earth metals are not easily accessible, just like uranium wasn't easily accessible to all investors. So we think that thesis still holds. If we think about who we're targeting and who we think metals.io appeals to, I'd probably break it down into 3 cohorts. So one is, dare I say, crypto investors that are investing in other altcoins and other digital assets. We think actually what we built on metals.io, because you can just connect your wallet, it means you can hold some very well diversified assets alongside those other digital assets. So that's one cohort, and we think that's super important. And some of the utility around, like we've done with uranium again, around borrowing and using those metals as collateral is something that we want to build into metals.io as well in the future. So we think that's quite exciting for more of the on-chain native user. At the same time, you mentioned traditional commodity investors, so people that are more Web2 or TradFi investors that invest in commodities now. We think we have a lot of advantages compared to the existing methods in the TradFi world, in terms of the spot commodity being something you can directly invest in rather than having to use derivatives where you've got basis risk and other externalities. We think actually by being straight into the spot commodity, there's benefits to that, to those traditional commodity investors. And also importantly, because our vision is to be a sort of main aggregating venue eventually for trading spot metals, we expect to attract institutional investors and people that are looking to take physical delivery of these metals and actually seeing value in being able to trade it on modern blockchain-based rails. And so, again, those 3 cohorts, we think it is relevant for the crypto investor. Absolutely for those people trading commodities right now, we think there's advantages to doing it on-chain via metals.io. And then finally, we expect to attract both institutional investors and people involved in heavy industry that need these metals to support what they're doing in their businesses that is beyond investing.
So commodity markets are being fragmented and layered with intermediaries. How far are we from tokenization actually becoming mainstream and kind of solving this problem?
There's 2 parts to that question. I think the first part, how far are we away from it being mainstream? I think we're still quite away from it being mainstream. And I think what needs to happen is those large traders and institutional investors and institutional users need to get on board with this as a primary mechanism, and then we'll see the real shift. So we think we've built something that is scalable and suitable for that, but I think we're quite away from it being quote unquote mainstream. In terms of what it solves, it actually, if you think about all those intermediaries you reference, all those intermediaries exist because people are trying to manage their risk and manage primarily their counterparty risk, right? So throughout the supply chain in getting metals mined and delivered, you've got all different parties involved to try and stop the risk of that metal not being delivered to the end person that bought it. And so actually, if you think about what tokenization delivers in this regard, it does reduce some of that need for counterparty risk management because you are buying it on metals.io, we hope, and then you're having settlement near instantaneously, and that serves as a sort of irrefutable record of your ownership and transfer of that ownership. that then can be used to support physical delivery from a warehouse or from wherever you may be sourcing that metal from. So we think right now we've solved some of the core problems, but I don't think we'll be ubiquitous in the very short term. I do think once people start to see the benefits that we've delivered through metals.io and will continue to deliver, certainly a lot of that fragmentation and intermediation that we see in the current commodities markets, we expect can be reduced, which reduces cost for everyone, which is a benefit for both buyers and sellers in the market. And that's what we hope to achieve overall with metals.io, is a more efficient market with more people participating.
Okay, perfect. And we have one final question. Obviously, metals.io step up from uranium.io, let's say. What is coming next? What is on the roadmap?
Yeah, so we think there's enough to go after in metals, and we've been very punchy with the name in terms of metals.io. So in the short term, that very much remains our focus. We've got 3 other metals, I'm pleased to say, potentially 4 lined up for the rest of 2026. And we're also looking about how do we take what we've built in terms of tokenized infrastructure and the ability to take the tokenized version of uranium, gold, let's say nickel, palladium, cobalt in the future, and actually use that as the foundation for other products, maybe even TradFi products, more specifically ETFs and things. And actually, you know, a lot of the barriers to having exchange traded products or exchange traded commodities in terms of physical metals is a lot of those physical and operational barriers, minimum lot sizes that make it inefficient or impossible to create these products that more people can access even in the TradFi world. We actually see metals.io as more of an infrastructure play than a product play. And so I think the thing to keep an eye out for is how we take this core foundational infrastructure that we're building in metals.io and apply that not just in one place, i.e. metals.io, but also across a wide spectrum of different products as well.
Okay, well, thank you for joining us, Ben. This was all for today's Tezos Explained podcast episode, and see you next time.